Next, we'll learn how to construct and use a trial balance. A trial balance is simply a list of all the accounts with their balances. Assets are listed first, then liabilities, and then stockholder equity accounts. The trial balance has two columns, and the two columns total show that debits equal credits. We usually prepare a trial balance at the end of the period before we prepare our financial statements. And once you prepare your trial balance correctly, it helps preparation of the financial statements. Let's take a look at an example next. If you remember, this is the example that we did earlier where we did our debits and credits and we took a balance of each of our accounts. Now what we're going to do is create a trial balance with the same information. Remember, a trial balance is just a list of all the accounts listed in the order of the balance sheet, so assets first, liability accounts next, and then owner's equity accounts. Just like our financial statements, we will have a header for our trial balance, which is right here. So you start off with the name, then the name of whatever we're preparing, which is a trial balance, and the trial balance is just like the balance sheet, a snapshot of a point in time. It's prepared for a point in time. In this case, it's prepared for the end of the month, which is the 30th of January 2012. Now, the trial balance lists accounts in the order of the balance sheet. And if you remember, the balance sheet lists accounts in order of liquidity. Liquidity means the ease of being converted to cash. So always the first item in your balance sheet would be cash, therefore the first item on your trial balance would also be cash. Then what we do is we go look at the balance of cash on our date, which is the 30th of January. The cash balance on 30th of January is 143,000, which is a debit balance. So in our trial balance, we will go ahead and put in 143,000. Next, we go and look at the next asset. The next asset here, again in order of liquidity, is accounts receivable. Accounts receivable goes here, and we look at accounts receivable balance. Our accounts receivable balance is 10,000. Again, a debit balance, so we put that 10,000 on the debit side. The next asset that we have is supplies. So we would go ahead and put our supplies next. The balance of supplies is 5,000. Again, a debit balance, so we put 5,000 in our trial balance. The next asset we have is our long-term equipment. Equipment of 55,000. Again, it's a debit balance, so we would put our 55,000 as a debit on the debit column of your trial balance. Now we've gone through all the asset accounts, so it's time to move on to our liability accounts next. If you look at all the T accounts that we have here, the only liability account we have is accounts payable. That would be the one to go here next. Accounts payable. The accounts payable account has a credit balance of 5,000. So you would now move over to the credit side and put that balance in the credit column. That was the only liability we had, so now we can move on to the owner's equity accounts. With the owner's equity accounts, the first thing that always appears on a balance sheet is common stock. So for common stock, it's a credit balance of 200,000, so we would go to the credit column, 200,000 on the credit side. After common stock, you typically find retained earnings in your balance sheet. However, since this is a brand new company that we just started, we don't have any retained earnings. This is the very first month of operations. So we will move on to the next owner's equity account, which is revenues. Don't forget, revenues and expenses as well as dividends are part of retained earnings. They're retained earnings accounts. So next we will put our revenues here. Revenues, again have a credit balance here of 20,000. So we will go ahead and put 20,000 here for revenues. Once our revenues are over, we go on to our expense accounts. We got 3 expense accounts. We got rent expense, which has a debit balance of 4,000. So don't forget, you need to put them in the correct column. Debit balance of 4,000. We have utilities, which has a debit balance of 2,000. And we have salaries. And you would write out expense at each point. So we have salary expense of 6,000. That completes all the accounts that we have in our ledger. All these accounts would be in your ledger. Now you've taken into account all the ledger account balances and you've put them either on the debit column or the credit column of your trial balance. The next step would be to get a total for your debit column and your credit column. If you'd like to pause this video and add up all the numbers on the debit column, you will find that the total comes up to 225,000. Now we need to go and add up the totals on the credit column. And if you take a calculator and add them up, they will also come up to 225,000. If you notice, our total debits are equal to our total credits. If when you prepare your trial balance, you get your total debits equaling your total credits, that means you've prepared your trial balance correctly and you can move on to the next step. In this case, we are going to be preparing financial statements. I will not go through this example for financial statements because we covered that in chapter 1, but you can prepare financial statements easily using the trial balance, because as you can see, all the accounts are grouped in one place. If you want to prepare your income statement, you see that revenues are here, expenses are here, so you can easily prepare your income statement. If you are preparing your balance sheet, all your asset accounts, liability accounts, and owner's equity accounts are all grouped together in order as they appear in the balance sheet, so you can quickly compile a balance sheet. So to summarize the flow of accounting data, a transaction occurs, a transaction is analyzed, the transaction is entered into the journal, the transaction is then posted from the journal to the ledger, and then you prepare a trial balance at the end of the period. The next steps will be covered in chapter 3. However, once you prepare a trial balance, at this point you can prepare your financial statements as well.